Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday morning pre-market webcast. Okay, the band ride is over. You see the red candle here, no engagement with the upper band. We've come down in the overnight to test the 9-day. So far, the 9-day has held as support, so we'll have to see what happens when we get into the regular session. What I would say is you got a series of lower highs and lower lows. You got the weekly pivot down at 66.5. And as long as that hourly mid-band stays as resistance, there's no reason why, if it bumps its head here, the next lower low wouldn't be a test of weekly pivot. So basically, as far as we're concerned, it was a choppy morning. There wasn't a lot going on. We got short 91.75 off the FOMC reaction. We covered that. We didn't do the high that they did during the press conference. They walked it right back up to the area that they threw them off of. And then we went ahead and shorted 91 against 93.5, and we took big profits on that, and I still have the runner from that. So as I head into today, I'm just kind of looking to see if the bears have more in them. If they don't, I'll cover, and we'll look to get long. If they do have more in them, then I want to be selling rallies today. There's no reason why, if we're doing lower highs and lower lows, you can't sell some rallies. Just understand that the bears are in a position where they've been beat up pretty bad the last, I don't know, call it a week or so, 2 weeks. And the dip buyers are going to come in. They're going to come in, they're going to pop things, they're going to make them cover. But as long as we're doing lower highs and lower lows, ultimately the direction is down, at least for the moment. If the bears can convert weekly pivot, if they can convert weekly pivot and turn it into resistance, then your next natural area over the course of next week would be the area of the daily middle band. Today, that's 44. Obviously, that's going to change. It's basically the 20-day simple moving average. So as lower days get shed, as the band ride is more reflective of the moving average, that 44 is going to glide higher. And at some point, it's pretty likely, as a function of time or as a function of price, those two areas are going to meet, price and the mid band, and then you can decide what it wants to do. Last time it tested it, it wanted to hold and head higher and do an upper band ride. Does it do the same thing? Does it hold? Does it break? I have no idea. But we just have to understand that it's a big inflection point when it gets there. So for today, watch the hourly midband, 81.5. Watch the weekly pivot. Watch the 72.25 overnight low. Above the hourly midband, you've got daily pivot, effectively 84.75, 85. Then you're back up into that 91 to 96 area. You had matching highs at 96 yesterday, then a lower high that couldn't get back through 94, 93.5, and then we headed lower. On the downside, you break weekly pivot, then you're looking at the low from Friday, which was 55.75. So that's basically the lay of the land. All right, everybody have a good one. I will be out on social in a little bit. Trade them well. Talk to you then. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.